Yes, it is really true. I'm doing a Friday Night Live. Last week I was traveling, and that's starting to open up again. I've been on the road for the last couple of weeks, so and I've talked about that on the live stream. That's going to become an issue as far as trying to schedule a regular thing on any day of the week, because I might be traveling on Monday and Friday. I might be teaching in the classroom on Tuesday, Wednesday, Thursday, whatever. So it's going to be hard to do that. But tonight I am here for Friday Night Live. I actually just finished a class and finished a little bit early, so that gave me a little bit of time to prepare a Friday Night Live for you. Welcome, everyone. It's great to see you. Debbie Hatch. I wanted to talk tonight about flexible spending accounts. We've talked about them before, but I want to talk about them again because we have something special that's going on right now. There is going to be an out of season open season. We call this a special enrollment period for our flexible spending accounts, and it's going to run for the month of June. So it's actually going to be offered from 1 through 30 June. And to gear up for that, I thought it would be really helpful to tell everyone what the changes are that are allowing or driving this special enrollment period. What kind of things can you change with your flexible spending account during that special enrollment period? And even before that, like, what's a flexible spending account anyway? I can say that a lot of federal employees don't understand how these work or don't understand the benefit of them. So I wanted to talk about that. And I just talked about it in my class this afternoon. So I got some feedback from students, which was awesome, but I wanted to share it on the Friday Night Live as well. So before I talk about the changes that are coming in during the special enrollment period, I want to bring you up to speed on what a flexible spending account is in the first place, and then we'll go ahead and talk about the changes. So within the federal government, we employees have access to 3 different flexible spending accounts. We have a healthcare flexible spending account, a limited expense healthcare flexible spending account, and a dependent care flexible spending account. The difference between the 3 is what counts as a qualified reimbursable expense. So the healthcare flexible spending account will reimburse us for anything that is health related, except the cost of premiums. So I might use that one to pay for my co-pays, to pay for my deductibles, to stock my medicine cabinet, or anything of that nature. There has been a couple of changes over a couple of years with what's reimbursable for that healthcare flexible spending account. For a while, over-the-counter medications were considered to be a qualifying expense. And then when the Affordable Care Act came in, it took over-the-counter medications off the table unless the person had a prescription from their doctor. Because of the Family First Coronavirus Act, over-the-counter medications are once again reimbursable. So that's not a new change that's taking place right now, but that is a change that has taken place over the last year. So if you weren't tracking that, do know that the over-the-counter medications no longer require a prescription like they did not a while ago. So that one's for everything except premiums. The limited expense healthcare flexible spending account is limited from a couple of different perspectives. The only people who can do it are those who are enrolled in a high deductible health insurance plan, and it is limited to a reimbursement of only dental and vision expenses, but not everything else like the first one was. The dependent care flexible spending account will reimburse someone for having to pay to have another individual taken care of so that they can work. Quite typically, that has been used for a dependent child up to the age of 13. But in reality, it can be anyone that I could legally claim on income taxes. So sometimes, we have elderly parents, we're taking care of them. We can claim them on our income taxes because of that, but maybe we're not able to leave them alone so that we can go to work. So I could use the dependent care account for that as well. Hey, Corey. Hey, Deborah. Hi, Paul. Welcome. It's so good to see you here. Okay, so that's what it's all about. Now, the eligibility to participate in a flexible spending account and the open season to sign up for one is exactly the same as health insurance. Our open seasons normally run from the second week of November through the second week of December. And the changes that we make during that open season become effective in January. I really want to stress the fact that if we're eligible for FEHB, whether we have it or not, we are eligible to enroll in the flexible spending accounts. And this becomes a big issue when we have people who retire from the military who then become civil servants. Many of them are not utilizing FEHB, they're utilizing their TRICARE. But as federal employees, they could use FEHB. They are eligible for it. So even though they don't have it, yes, they can do flexible spending accounts. And that's a question that comes up quite frequently. So I really want to put that out there. So during this enrollment period, hey, Connie, during this enrollment period, I choose how much money I'm going to have come out of my paycheck before I pay taxes. And essentially it goes into my flexible spending account bucket. And then I'm going to be reimbursed, now able to pay for things with pre-tax dollars instead of post-tax dollars. Okay, that's the benefit of these things. That's how it's going to save me money. During the open enrollment, our minimum is $100. Our maximum for the healthcare and the limited expense healthcare has been $2,750. That's going to change, but it has been $2,750. And the maximum for the dependent care flexible spending account has been $10,000. So I choose how much. That money is coming out of my paycheck in equal installments over the next 26 pay periods, and it's coming out before I pay any kind of taxes. These things have, for the most part, been use or lose accounts, which means I have to sign up to do a flexible spending account every year that I want to do one. It's not one and done. Every open season, if I want to do it for the coming year, I've got to go and sign up. If I don't sign up to do it in the coming year, any money that's in the account, I forfeit. I lose if I haven't spent it by the end of that plan year. Now, we've had a little bit of a change again over the last few years where now we have been able to roll forward $500 from one plan year into the next for the healthcare and the limited expense healthcare. And what that means is if I did one last year and I sign up to do one next year, then I'm allowed to carry forward normally $500 into this new plan year. If I didn't sign up to do one for the coming year, then I have forfeited that money. The dependent care flexible spending account does not have an amount that I can roll over, but instead it has had a grace period. For the healthcare and the limited expense healthcare, I had until December 31st to spend my money. For the dependent care flexible spending account, I have had until March 15th to spend my money. So that's how these things normally work. Now, they don't carry into retirement. And when I'm teaching class, I really like to stress that to people too. These will end on your retirement date. So it is important that you spend all of the money that you put in there prior to leaving your federal job, because whatever's in there on the day that you walk out the door, gone. Whatever's in there when we get to a new plan year, if you don't sign up to do it for the next year, gone. Okay? So really, really important that you pay attention. And as we get closer to the end of the year, especially, that you look at this and you spend any money that you have in there. Now, reimbursement for the federal plan is super easy. You can have an auto reimbursement where you are actually linking this back to your health insurance. You're linking it to your dental or vision insurance and it's paying the provider directly. Little to no paperwork if you're doing it that way. You also could choose something that's called pick and process, where you have a whole list of qualified expenses and you go down through that list and check off the ones that you want to use your flexible spending account for. Claims submissions can be done online. They can be done through an app. They can be mailed in. They can be faxed in. And you can receive the money through direct deposit. You can have them send it to you. You can, again, have it go directly to the provider, whatever you want to do. It's really, really easy. Now, none of this is new. Everything that I'm talking about right now is the way that the flexible spending accounts have been working. We have an open season, November to December. But outside of open season, you can make changes if you have something called a qualifying life event or a QLE. And simplistically, like a QLE means that you've had some type of change in your family status. you got married, you got divorced, your spouse passed away or something like that, or you acquired a child by either giving birth, by adopting a child, by taking on a foster child or something like that. So any kind of change like that, you've got the list right here, I'm not going to read it to you, but any kind of change like that is considered a QLE during, and that QLE is going to allow you to make a change during the year without having to wait for the open season. That's not new either. We've always had the ability to do that. And like I said, I just want to bring you up to speed with how it's worked to date so that you can see the kind of changes that are going to be taking place as we move forward. So the special enrollment period is being driven by a number of pieces of legislation that have been passed in the not too distant past, right? They're based on an IRS bulletin and the Consolidated Appropriations Act and the American Rescue Plan Act. So that's all that is driving these changes. And what we're seeing happen with the flexible spending accounts is that we will now be able to roll forward all of the money that we have in that flexible spending account. It's not capped at $550 for this year. As we go from 2021 into 2022, you can bring forward everything that you have in there. But also, this change was moving from 2020 into 2021. So even if you had more than $550 in there when we moved into January and that money was forfeited, that money is now coming back to you. It's unlimited. It's not capped at $550, back to crossing into 2021 and crossing into 2022. In addition, we are extending the grace period for the dependent care flexible spending account that has been to March 15th, but for the 2020 plan year and the 2021 plan year, that dependent care flexible spending account grace period is going to go through December 31st. It is not going to end on March 15th anymore. Another thing that we're seeing is the children under the dependent care flexible spending account have aged out when they have their 13th birthday. But with the changes now, they can be covered up to their 14th birthday. And if you had a child that aged out this year as we were moving into this, and they aged out because they had their 13th birthday, the cost for caring for that child will now be extended through age 14. And that does happen retroactively. So if you're enrolled in it, you're going to see that change when you log into your flexible spending account. Another thing that has happened is an increase in the amount that we can put into our dependent care flexible spending account. The healthcare and the limited expense healthcare gonna remain at $2,750, but the dependent care flexible spending account is being raised from $5,000 to $10,500. So that's a very significant change. And because of that, we are seeing this special enrollment period. It is going to run from the 1st of June through the 30th of June. During this special enrollment period, if you are already enrolled in a flexible spending account, you have a one-time change to increase or to decrease the amount of your flexible spending account. If you decrease it, you cannot go below what you have already contributed to the account. They're not going to give you a refund or anything like that. So you can increase, you can decrease. You can enroll for the first time. If you didn't sign up for the flexible spending account back in the open season that was running November to December, you can sign up now. And again, that dependent care flexible spending account is increasing to $10,500 from what was $5,000. So Tiffany's asking a question. Does that mean that the money I spent in April on childcare this year can be reimbursed from my 2020 funds? It does. Yes, Tiffany, it does. And you should see that change when you log into your flexible spending account dashboard. It would be in there. That's absolutely correct. Now, in order for me to be able to carry money from one year into the next, I had to sign up during that open enrollment period. I talked about that initially, and that's always required. So if you did do a flexible spending account last year and during the November to December open season, you signed up to do one this year, then you can use any of the expenses that you have incurred for the entire period. If you've signed up, you can use any expenses that have occurred based on your money that you had in there already at the end of the year. However, if you did do one in plan year 2020, but you didn't sign up in the open season that took place in November and December, meaning you're not currently enrolled in a flexible spending account, and you lost money because you didn't sign up to do one this year, if you sign up to do the flexible spending account in the open season that happens in June, then they are going to go back and give you any money that was forfeited when you didn't sign up in this new plan year. That is going to be retroactive to you. Now, people that did sign up can go all the way back to January and use their money for qualified expenses. But if you didn't sign up in November and you sign up in June, yes, you get your money back, but you can only use that money for qualified expenses that occur from the time that you sign up in June going forward. The period of time from January to June, you can't be reimbursed for that if you weren't covered under the flexible spending account because you didn't sign up in November. I wanted to bring the slides forward so that everybody can see them. So you can stop the video at any time. You can write down the instructions or whatever. If you want to make changes, how exactly do you do that? So one change that you can make is to increase or to decrease the amount that you put in there. You make this change by going to fsafeds.com. And the instructions are right here. Make sure that you are selecting the 2021 Special Enrollment Period tab where it says Enroll in the Plan at the top of the home screen. Select the 2021 Special Enrollment Period and then click on the increase or decrease event type. One thing to note, when you click on that, and then you accept it, it is going to take you into the QLE screen. Remember I said, normally if you have a qualifying life event, you can make a change outside of open season. When you accept this change, it is going to take you into the QLA screen, but you do not need a qualifying life event in order to do this. It's just the way that the computer's taking you in there. Just click through and those changes will be made. Same thing if you are enrolling for the first time. You're going to go to fsafeds.com, make sure that you are selecting the 2021 Special Enrollment Period. You are going to hit the Enroll or New Account tab. It's going to take you to the QLE screen. Don't freak out about it. You don't have to have a QLE during this Special Enrollment Period. That's just how they're taking you through to process everything. So you do not need a QLE. I also want to make sure that you are aware the changes that we make are because of this special enrollment period right now. That is not going to limit us to being unable to make further changes as we go through this plan year if in the future we do have qualifying life events. Those things remain regardless. Now, all of these changes are taking place because of the pandemic, but you do not have to have anything that's happening with you because of COVID in order to make the change. This is open to everybody. And again, you do not have to have a qualifying life event. So that's everything that I wanted to bring to you tonight. It is kind of news. I mean, they released the information last week that they would be having this open season, this special enrollment period in June. We knew it was coming. We didn't know when it was going to be coming. So they just announced it in June. Tiffany, I'm going to go ahead and send you an email as well that has that benefits administration letter in it. So you have everything so you can look at it and understand how this works going forward, okay? I'm going to send that to you when I get off here. If you are watching, and I can see on my phone, that's why I keep looking down. If you're like, what the heck is she looking at? On the software, on the computer, it doesn't always come through, but I can see on my phone who's watching, and I can see the comments on my phone, even though I don't get them on my computer. So that's why I'm looking down there. If you are watching right now, and you have questions about the flexible spending accounts, how they normally work, how they are going to work in this special enrollment period, please let me know. Just drop a comment in there and I will see it between the two of them. Or if you're watching this on the replay, do make sure that you let me know you stopped by. Just go into the comments and type replay. Let me know that you were here. Let me know if you have any questions. And let me know if there's something else that you would like to talk about as we go forward with these Friday Night Lives. I don't see any questions coming in, so I am going to hop off here. I am going to wish everyone a great weekend. Take care of yourself. Thanks for being here. And let me know if I can do anything to help you.